Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Thursday, February 21st, 2013. Well, a downtrend today, a candle that made a lower high and a lower low, and another fairly large black body candle. The size of the body is roughly the same size as the previous day's trading, suggested that the sellers have maintained the downside momentum that they had for the previous day's trading. A very substantial amount of net bearish progress made by the sellers between the open and the close today. Importantly, the market took out this zone, highlighted yellow zone of previous resistance and support, and that was a very, very important level for this market. And the bearish manner in which it took it out suggests that the sellers are very, very firmly in control of this market at the moment. I was expecting that the market may have tested down through there, and we may have seen some buying coming in, as we have seen, but now that area has been blown away in a major way by the sellers for today's trading. Now, where the market's trading at the moment, we have just taken out the 131.96 area of previous resistance and support, so an important level of support there, but the market has found support at the top of the cloud, which is what we'd expect. We can see the shadow on the bottom representing upside price rejection, and we know and can be confident that the area through the cloud extending down to 130.25 will potentially hold as very, very strong support for this market. We do have some major levels extending down through there, so 130.145 and 130.79, and then down to this 130.25 level are important levels. Now, if we do see this market rally, we need to bear in mind that this zone may now turn into resistance, and this here highlights very well how support and resistance can change their roles, and where this market was strongly rejected from in this area, only within a week or so later it was holding as support. Now we could end up seeing the market, this zone here, holding as resistance for this market, and this zone extends up to around the 133 level, so potentially some solid resistance overhead, and it coincides with this important level at 133.20. Now, this candle has actually closed down towards the low, suggesting that the sellers have closed with control of this market. They did lose some commitment down around within the cloud and at the top of the cloud, but still very, very strong control, showing some decent commitment. There is a possibility that the market could test lower, but as I've mentioned, we do have strong support below. Now moving to the Fibonacci extension, and we're examining the relationship of the first time frame downtrend that the market has now entered into and comparing that to the previous time the market was trending down, and today we saw the market take out the 78.6 and the 100% level, which is quite important in a fairly bearish manner. It does suggest that there is a strong possibility of this market testing down to around the 130.83 area. Now moving to the Fibonacci retracement, a similar scenario here where we've seen the market in an expensive mode through the 100% for the previous day's trading, but we hadn't had that change of trend at the time when that occurred. But today, with the confirmation of the change of trend, we saw the market trade through the 161.8%. The next target here is at 130.99.5. That's the 261.8%, and it does make this zone within the cloud very, very strong. Now, in terms of Ichimoku, we still have a bullish market in the long-term time frame. The market is still just trading up above the cloud, so technically bullish in the long-term time frame. But the market is bearish in the medium and short-term time frames by trading below the Kijun-sen and the Tenkan-sen. Some time ago, we had a crossover of the Kijun-sen and the Tenkan-sen, with the Kijun-sen being on top. That occurred above the cloud, so it was a weak sell signal with the Ichimoku charts, and obviously weak because there is potential for the market to find support at the cloud. So it has turned out to be a good signal, but let's see how the market reacts around this area and to this strong support zone with the confluence of the Fibonacci levels within the cloud. With the market trading down below both of these indicators, if the market does bounce and trade through the highlighted zone of potential resistance, then they will offer themselves as very strong support for this market, and the Tenkan-sen is trading just above the 133.20 area at 133.40, and the Kijun-sen is trading above the 134 level at 134.35, but I doubt that we will see the market interacting with those levels, especially the Kijun Sen, anytime soon. So overall, a slightly bullish market in the long-term time frame, almost neutral, so can't be too confident about taking trades to the upside, but a bearish market in the medium and fast-term time frame, so certainly trades to the long side in a longer term perspective are no-no. We do need to wait until we see this market develop in either direction, trading so close to the cloud, very close to being neutral. There is a possibility of the market extending down to within the cloud and potentially finding support there, but we do have very strong support here where the market's trading at the moment. We could see the market bounce to test within the highlighted yellow zone.